Hey, what's up everybody? It's Tuesday, July 21st. How's it going? Not a lot to talk about so far as the stock market is concerned. A little bit of a pullback in the NASDAQ from yesterday's big run-up. So that's normal, I guess. And again, we're just talking about 7 stocks: Apple, Amazon, Microsoft, Facebook, Tesla. Tesla pulled back today. What else? Google, Nvidia. You know the names, right? So that happened, and the Dow was up, but it gave back about half of its gains. It was up about over 300 points. I think it closed up about 140. S&P up a little bit. So basically same trends intact there. NASDAQ at all-time highs or just slightly below. S&P, Dow still not making new highs. Russell nowhere near it. The big news today, folks, gold and silver. How about that? And the dollar. I'm going to talk about all three. Gold, 1844. That is the highest level in 9 years. Folks, I went back and I looked at a chart of gold, and it made me think about my initial bullish call on the metal in December of 2015. I was a contributor to Real Money at thestreet.com. At that time, I was writing, I said, when the Fed raises rates, because that was the first time back then, December 2015, where the Fed reversed course and raised interest rates for the first time in 9 years. Gold was at $1,043 an ounce. I said, you gotta buy it, you gotta buy it, you gotta buy it. People were like, Mike, you got this all wrong. Rate hikes are bearish for gold, it's going down. I said, nuh-uh, you don't understand. Rate hikes equate to price hikes. I've always explained to you how to think about rate adjustments by the central bank. They are price adjustments. Rate hikes are price hikes because the cost of credit is reflected in the cost of all goods and services. I bought gold right then on December 15th when they raised rates at $1,043, and now look at it. Now there was a period of time, now you could say, Mike, Fed cut rates. They've been cutting rates since March of last year, remember? That's correct. So in between that period of the rate hikes when gold was bullish and now the rate cuts, there's still underlying fundamentals for gold itself. Don't forget, gold is a commodity. It's an industrial metal. It has its own supply-demand fundamentals. And I have often made videos talking about those fundamentals, that we have seen a very significant decline in gold mining investment over the last 10 years. And I talked about, back in 2018, I talked about what I saw at that time as the big tip-off as to why gold was going to go higher, because you had these big mining companies acquiring reserves through mergers and acquisitions. And it told me that it was cheaper for these miners to acquire new gold reserves through acquisition, buying other companies, than it was to mine for the metal. That was the tip-off right there that it was going much higher. Now that it is at these levels, it's attracting a lot more investment demand, and I suspect that's going to continue. Hey, just as on a side note, the Senate just advanced the nomination of Judy Shelton for a Fed position. She is a noted gold bug, believe it or not. I mean, I don't think there's any economists left around, even these Austrian hard money economists who believe we need to go back on a gold standard, but she believes that. So her nomination now proceeds to the full Senate. And I think if she gets appointed to the Fed, you're going to see a lot of speculative buying. It's going to push gold up higher. Now again, I'm not a gold bug. I don't think gold is money. But I think at zero interest rates pretty much everywhere in the world, it has become a legitimate institutional asset, like an asset that institutions don't have a problem earning. Anyway, silver at a 6-year high today, folks. It's been amazing. It was a 5% advance today. Now let me talk about the dollar. All right, those of you who have followed me for any length of time, you know that I turned bearish on the dollar at exactly the same time it was back in December 2015 with the increase in interest rates, that flip in monetary policy. And again, you might say, no, Mike, rising interest rates, that's bullish for the currency. No, it's not. Same principle. It's a price increase. It's inflationary, which is reflected in the foreign exchange market as a lower exchange rate for the currency. Now, in addition to monetary policy, because let's face it, over the last 5 years, the Fed has been raising rates, then it's been cutting rates. So you might say, well, Mike, the Fed's been cutting rates now. Shouldn't you be bullish on the dollar? The underlying factors, the long-term macroeconomic factors that dictate exchange rates, fiscal policy, and trade policy. And I knew that, number one, those factors were still in place in a big way, and they've expanded in an enormous way when it comes to fiscal policy. And when we got into February, March of 2018, if you remember, when the trade war really started to blow up, and there was this huge rush into the dollar. These are portfolio shifts into the dollar on the belief that, oh, the trade war is going to be beneficial for the US dollar. Investors got way ahead of themselves in the sense that, look, if that trade war ended up causing the US trade balance to go positive, in other words, from deficit to surplus, yes, that would have been a strong positive for the dollar. But that never happened. And not only did that never happen, the trade deficit got worse under those policies. So I knew all along, when you combine what was going on with the trade deficit and what was going on with fiscal expansion, massive, unprecedented fiscal expansion, that the underlying macroeconomic fundamentals for the dollar remained sharply bearish. And I knew eventually, see, because when you have these portfolio shifts driven by emotion or fear, but underlying that are the true fundamentals, eventually once that emotion or fear subsides, the primary trend reasserts itself, and that is exactly what we're seeing now in the US dollar. It is going down. It is going down, and more people are starting to understand that. These shifts, these portfolio shifts are getting reversed, and until we see fiscal policy, trade policy move the other way into a positive balance, which I don't think we're going to see for a pretty long time, the dollar's primary trend is down, and it is reasserting itself. And I was never really concerned about that. I always knew that ultimately the trend would reassert to the downside, and that's why in the last 2 years, I always talk about patience. That's how the big money is made. I've been building a position, selling into the dollar. Look, the euro is at an 18-month high against the dollar. The Australian dollar is at a 15-month high against the dollar. The beleaguered British pound is rising against the dollar. The New Zealand dollar is rising against the dollar. The Canadian dollar is rising against the dollar. All these trends are primary trends. What happened in the period from 2018 until March of this year, and the dollar had already begun a downtrend, but then we had that coronavirus market crash, and again, a flight, a panic into safety, but that's all unwinding now. That's all unwinding now. The dollar index hit a 94 handle today, and it is on its way down. So this trend, in my mind, was never in question. It is reasserting itself now. One more thing I want to add. I just recorded my new podcast today. It'll be out tomorrow. You got to listen to this because I go after the MMT critics. Look, I'm not against criticism if it's informed and if it's intelligent. But the thing about these MMT critics is they throw up these ridiculous straw man arguments and they knock them down, and it shows that they have never spent as much as 5 minutes examining or reading the MMT literature. They know nothing about MMT. They ascribe things to it that MMT never said, and their criticisms are completely bogus. You're going to love it. The link is right here to my podcast in the description below, and so is the link to sign up for a 30-day free trial of MMT Trader. See everybody tomorrow. Bye-bye.